Hello traders, it is Sunday, October 6th, and it's time for our weekly video. Let's start off as we always do with a review of my previous pick. APP was a pick that I highlighted last Sunday. We have been looking at this stock since it broke out way back here, and we loved it. We're long in here, and look at the run that this stock has had. Now, it's had time to consolidate. It's had time to compress. So typically you would take gains in here as the stock starts to compress. It catches up to the EMA 8, and now you've got a chance for the stock to continue to move higher. Please go back and watch my previous videos. Make sure that what I'm telling you is true. I had mentioned to you I liked getting long APP even more if it came on a buy signal. And so if we go into the 30-minute chart, you can see there's your buy signal right here. This is what the stock had been doing previous to that. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Look at that rally. So the stock has basically run up from $130 to almost $140. Really nice entry point. And I've been trying to emphasize that when you have a stock that you really like, on a D1 basis, you don't have to chase it. Wait for a pullback. These trade signals are an excellent way to do that. And you saw me do it in the last video. Right click, use a trade signal. You can use M5, M15, M30, use any of those time frames, and then the system is going to know that if the stock is currently on a buy signal, it has to go to an exit or even a sell signal, and then when it goes back onto a buy signal, you'll get that alert and you'll know that it's time to evaluate what the stock has done during that time. If there's been a dip, we want it to be brief and shallow. So we don't want massive drops with stacked red candles. That would be a sign of heavy selling pressure. If that dip is brief and shallow, we know that buyers are still there, and when that buy signal comes up, it's going to provide us with an excellent entry point. So let's take a look. Let's do some market analysis. Before we do that, please give the video a thumbs up. If you like the content, if you like my picks, please help me out. It's going to help me grow my channel. I'll be able to reach more traders. So if we take a look at what the market has done, this is a daily chart of the SPY. We can see that this breakout right here was after the FOMC statement. And it was kind of a muted reaction. The Fed came out and said, hey, we're going to lower interest rates by 50 basis points. That was more than expected. So now all of a sudden asset managers are thinking, well, I don't really want to chase stocks at an all-time high. What does the Fed know that we don't know? Maybe there are some signs of economic weakness that are going to start showing up when those releases surface. Well, last week we had a ton of economic releases. We had on the employment side, ADP, JOLTS, Challenger Grain Christmas, initial jobless claims. All of those came before the jobs report on Friday. All of them were much better than expected. So Friday, the expectations were for about 150,000 new jobs in September. 254,000 new jobs were created. Much stronger employment. We also had ISM services that came out, I believe it was at 54.8, 54.9. That is a monster number. That is well into economic expansion territory. And I really pay a lot of attention to that particular number because as a survey, it's one of the most current pieces of economic information that we have. This is what data or what purchasing managers are actually thinking right here, right now. And because 80% of our economic activity is tied to the service sector, it's a very important number. It came out really well. So Friday, we get this nice jump up in the SPY, and we don't chase gaps up. We wait for support, and we wait for that bid check. And you know that because that's what I've been preaching over the course of the last 2-3 months is wait for these dips, wait for that support. You have a higher low, double bottom. You've got a 1OP cross in here. This is a good entry point, okay? So we spend a little bit of time around VWAP, but eventually the market lifts off and we closed above the high of the day. And if we look at the daily chart, you can see how the all-time high, the open there, was 574.38. So we are right there. This week, I expect to hit it. So the long and short of what's been taking place is you get this nice little pop on the Fed, but bid check, bid check, bid check for about 2 weeks. Asset managers were not that excited to buy. I still don't think they're excited to buy, but they can't deny that the Fed is dovish and that economic growth is intact. So what I believe we're going to see is a very tenuous move higher. We have a Fed announcement in November. I believe it's going to be right around the election. So that's going to be a very important window. Do we stay in a holding pattern until then? I don't think so. I think what we're going to see is a gradual, tenuous float higher. And we do have one more catalyst. We're going to start getting earnings reports. The banks will be on deck. So we'll hear from JP Morgan Chase and Citi and Wells Fargo, Bank of America. The banks are going to dominate the early earnings scene. And given that we've got a dovish Fed and we've got very good employment numbers, that should bode well for banks. So we'll see what those earnings reactions are. Typically heading into earnings season, you're going to have a pretty strong bid to the market. So given everything that's played out, we also had a cup and handle breakout. So this is a technical pattern that's very powerful. We get the breakout, didn't get any follow through, but we were able to hold the breakout. And then Friday, we finally started to move up. So we've had time to digest these gains. I believe that we're set up for a float higher. But Pete, what does a float higher mean? How am I supposed to trade that? Well, first of all, what you'd ideally like to see is long green candle after the FOMC, long green candle and follow through on heavy volume. We don't have that. Instead, if I go into a 30-minute chart, this is what we've got. Lots of choppy back and forth price action, buyers and sellers, nothing to get excited about here, okay? And the volume has been light. So you favor the long side. If you are a day trader, you know that your mentality is set. I wait for pullbacks. I wait for dips. When I see support, I am only focused on buying the strongest stocks. And because the volume has been relatively light, I don't go gonzo. I take smaller positions. That's how you need to be trading. From a swing standpoint, we have starter swing positions on. If we break out to a new all-time high this week, and I believe we will, do you take another leg and add it to the position? Really depends on how risk adverse you are, how aggressive you are. I would say, yes, you probably could add if you've got some really nice stocks that are setting up well. I think you can do that. If you wanted to be a little bit more passive, thinking that, over the course of the next 3 weeks with the FOMC coming up, with the election results coming up, the market's been very choppy, it's been very tenuous. Maybe I'll just stick with my starter long positions on a swing basis. That's fine too. But by all means, on a day trading basis, wait for those early bid checks, watch for the strongest stocks. As soon as you have that support, you are only trading the long side. Forget about the short side right now. Don't see any reason for the market to sell off. So another thing that you could do on the swing side is perhaps you'll be looking to sell some out of the money bullish put spreads. So as I go through the list, I went through green royal flush, one of my favorite searches for day trading and for swing trading. So when I day trade these, I already know that I have a really strong tailwind. If I wanted to, what I could do is look, M5 buy signals across the board. I know these are going to be strong stocks. I click on the column header. I create an alert, and I'm going to do it all based on trade signals. So trade signal, M5, buy, add that. But Pete, the stocks are already on an M5 buy signal. That's right. They would have to go to an exit, which is a blue arrow on the chart, like that one, and then on a buy, and then you would get the alert. So the system knows that it's currently on a buy. And the advantage of that is that in order for it to flip exit and then buy, there's probably going to have been a compression. That would be ideal for getting long because that tells us that the stock never really pulled back very much. Or you could simply have a small temporary dip because the market doesn't go straight up. Stocks don't go straight up. They do a lot of this. And on those dips, you're able to evaluate, hey, did it preserve its relative strength? Are all the technical levels still preserved? If the answer is yes, this is going to provide you with a really nice entry point, just like on APP. So that's the tactic that I would use for day trading these. And it was so easy. It took me like 2 seconds to set that alert. Now, in some instances, you're going to have a stock that flips from a buy signal, then it goes to an exit, then it goes to a sell signal. That sell signal could last a week or two because that stock could be in a very long-term pullback. Doesn't matter to me. It's not going to come up on my alerts, so there'll be never any reason to look at it. And when it does finally come up on my alerts, you look at the chart and you go, wow, no, that is a much bigger, deeper pullback than I expected or than I want. And that is a sign that there is some pretty decent selling pressure in it. So no, I'm not going to be buying that dip. It's too deep and it lasted too long. So I'm going to go through green royal flush. We're just going to take a look at daily charts, see what we've got here. And Meta, you know I like Meta. I highlighted Meta a few weeks ago. I love the fact that it's leading tech stocks as far as the largest of the tech stocks. It did not pull back like QQQ did, and it's been compressing, compressing, compressing. This is a nice breakout. I still like Meta. I recently highlighted it, so I'm not going to highlight it again. CRWD. I know I highlighted this in the last 2 weeks or so, and I like the fact that the stock had basically been making higher lows, and it was right in here where I liked it through this breakout, and then it popped up. And so again, I suggested right click, set some alerts, and you would have gotten a buy alert right here above AVWAP-E. Yes, I like the stock, and I think it's going to challenge the 100-day and the 200-day moving average. Back in here, when it was down around the 274 level, I liked it a lot better than I do at 292. So now you don't have as much headroom until you get to the 100-day and the 200-day moving averages, and that's what I told you back here. So you either need to blow through, and then you would be looking to buy it up here on any kind of follow through those major moving averages, or alternatively, we like it. We like these higher lows. You want to wait for that buy signal. See the buy signal triggers. Let's take a look at maybe an M15 price point and see when those triggered. you gotta look at this entry point on crowd. All right, so you're waiting. There's my buy signal. You think you could have made some money on that move, knowing that you already like the stock on a D1 basis? Yeah, that was a nice move. Look at that. That's a nice buy signal. Could have done really well there also. This is how you need to be trading. If you look at all your stock charts, and there are going to be stocks that you've recently bought where it feels like the breakout is really good, the stock looks really strong, the volume is there, everything looks good, and you enter the trade, and then a day or two later, you're thinking, here we go again. You know, the market's up and the stock is pulling back a little bit. It's consolidating some of the gains that it's had recently. Why did I have to buy that thing so early? I could have bought it even better. That's what these buy signals are going to provide you with, and these alerts. So it's really important to use that. And when you're trading short-term options, time decay is a huge issue for you because your timing has to be absolutely impeccable, especially if you're trading weekly options or options that expire in a couple of weeks. Every day that passes, every few days that pass, tick, 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 time premium decay is eating away at your position. So if the stock has a dip that lasts 3 or 4 days, then it's going to take another 2 days just for it to get back to where it was when you put the trade on, and now all of a sudden you've lost this big hunk of time premium decay. So by all means, if you like trading call debit spreads that use weekly options, you should only be thinking in terms of buying dips right now. And then monitoring the dip. It's nice, it's brief, it's shallow. Stock is resting above a technical support level. Volume is starting to come into it. The relative strength looks good. This is the time for me to fire. And again, we don't have a go-go market right now. This is not a gangbuster asset managers feeling like, gotta have it right now, won't get another chance to buy at this level between now and year end. That's not what they're thinking, and we can tell that from the price action. Chopping back and forth and up and down and constant bid checks. So they're not that excited right now. And so in this environment, find those stocks, set those alerts, buy dips. Those will be your best entry points. And so CRWD, I loved it. Again, now I'm not going to highlight it because it is getting close to that 100-day and 200-day moving average. CRM, this is some gorgeous strength. Now, I'm not going to highlight CRM because I think that stock was highlighted by Harry on Wednesday. He did a solo live event. I took a little bit of time off, and that, I believe, is the stock that he highlighted in Wednesday's video. What an awesome pick. I mean, look at this breakout, this horizontal breakout through this high plus trend line and this high minus trend line. Bounces off the 100-day moving average. Put in a really nice day on both Thursday and Friday, and we can see that in a 5-minute chart. So, Harry, nice pick. All right, so next on the list is VST. I'm just going right down the list, and I'm looking for these breakouts. That is just a gorgeous horizontal breakout. That is a downward sloping trend line. You've got a buy signal here, and the stock gets through the 100-day moving average and AVWAP-E. Great entry point right here, and now the stock is smoking higher. Would I buy it now? No, I would not buy it now. I wonder what you might do with something like this that looks so compelling. Create alert. Go to trade signal. And because it's run so far, I'm going to be looking for a more significant pullback, meaning I need to see it come back to maybe the EMA 8 right here. And so I'm going to have to use a longer time frame. Instead of M5, I might have to use 15-minute or 30-minute. I'm going to use a 30-minute because I'd like to see it pull back a bit. And that will provide me with an excellent entry point. So I'm going M30 with it. I'm going to click that. Let's go check the 30-minute. Of course it's on a buy signal. Okay, if you had spotted VST earlier, like in here, and you used the tactic that I'm showing you, you would have had a gorgeous buy right here at $100. You would have had a gorgeous buy right here. These signals are really good, okay? If you use them properly and you find those strong stocks and you set these alerts, they are going to provide you with excellent entry points. Yes, you still have to go in and evaluate the dip. So from the time that this goes to a sell signal back to a buy signal, well, what did that dip look like? Nothing. Nada. There was nothing there. It barely even got going. Okay, well, good enough for me. That tells me that this stock still has a full head of steam. Next one, D-Dog. Okay, D-Dog, we'll take a look at that daily chart. You can see some entry points in here. Okay, nice buy signal there. Got a little sell there, which basically would turn out to be a tiny little loser in here. You get long here, you're out here. Let's call that a scratch. Maybe a little bit of money to be made here on the short side. And then there's a nice buy signal right in there. So if D-Dog was on your list, and this is on an M30 basis, if D-Dog was on your list previously, then you would have had a nice entry point. I like this stock. This is a choppy stock. Okay, so let me qualify this first of all. This is not like the other stocks that we've seen, for instance, VST and that type of breakout in CRM and Meta. Those stocks are all making new highs and breaking out. This is a choppy old stock, okay? But we can see if we hover over the historical implied volatility, it's somewhere in the 35 level. So it could set up well for us in terms of selling some option premium. And here's what I like as we zoom in. You've got a cup and handle formation. Yes, I've been mentioning it recently. Pete, do you only look for cup and handle formations? No, but if I see them, I'm going to definitely be aware of the pattern, and I'm going to be looking for that nice, clean breakout, which in this case, it takes us through the 100-day moving average, and Friday, it took us through the 200-day moving average, the black line, and that is a nice long green candle with the stock finishing on its high. Hover over the E. Oh, earnings coming up. Pete said earnings season was just about starting, so I better start checking and hovering over these symbols so that I know how to structure my trade. 11/6, November 6th. So, Pete also said that the market's not particularly strong, that we should buy dips. Well, another thing that we can do is on those dips, because we like the market to float higher, I can sell an out of the money bullish put spread. Well, what would we like to see in that stock if we're going to use that strategy? We know the option premiums are there, so that's good. And we'd like to have two defined levels of support between the current stock price and the short strike price. And maybe we'll get a little bit of a retest here. Maybe it tests that 200-day moving average. Great. So now I've got some information that I can use to structure a trade. And I do like this cup and handle. Do I think the stock is going to go straight higher to the 135 price level? Nah, probably not in this market, but I also feel that the market's going to be stable to higher because we've got earnings coming up. So I'm going to look to sell an out of the money bullish put spread. And if I look at the 100-day moving average, it comes into play at $117. So what I'm going to do is look for options that expire before November 6th, because that's the next projected earnings date. Well, November 1st would fit the bill. And again, make sure that you confirm those expected earnings release dates. These are projected, not confirmed yet. And if I go and take a look at what spreads I might have available to me, yes, I could go right at the 117 strike price, but I could go to the 115, 130, sell the 115 puts, buy the 130 puts. So I'm actually well inside of that 100-day moving average. I also have this was technical resistance level, these two green trend lines, now technical support. So I've got the 100-day moving average, the 200-day moving average. I've got the halfway point of the long green candle, which is probably going to come into play around that same level. I've got these two trend lines to lean on, and I've got the 100-day moving average. I've got multiple levels of support. And so for the 115, 110 bullish put spread that I would be selling, you can see that it is 45 cents bid offered at $1.17. I like to get $1 on these spreads. So if there's 5 points, $5 between the strike prices, I like to bring in $1 in credit. And if I do so, I've got to put up $4. So $5 between the strike prices minus the credit received equals $4. $4 is the margin that I have to put up. So if I take the $1 credit and I divide it by the $4, that generates a 25% return in about 3 weeks. And there's a good chance that the market will dip a little bit at some point Monday. Okay, I don't know that it's going to open gangbusters higher. We're before the market opens overseas tonight, so I don't know what the S&P futures are going to do. But if the stock pulls back just a little bit, there's a good chance I'll be able to get that $1 credit for this spread. And if you were super anxious to get this trade done, then perhaps you look at doing maybe the 116, 111, and getting your dollar credit there. So that's currently 83 cents bid offered at 123. That spread is very close to being there right here, right now. Okay, so you don't even need much of a pullback in the stock to get that trade done. That's how I'd be viewing the market right now. Day trading, watch for early dips. That gives you time to find the best possible stocks, the strongest stocks. When that market pulls back, the stock is not giving up any ground. It's steady as a rock. And then when you get that market support, you know that this stock is going to continue to tick higher. If you're setting up for future trades and you've got a stock that's a little far out of the gate, so it's been super strong, you don't want to chase it. That's when you want to start setting these alerts so that you can buy those stocks on dips. That's all I got for you today. I will be doing a live event on Wednesday, so please watch for that. If you haven't attended any of our live events previously, Harry and I take lots of questions from all the different attendees. Chances are the questions they have are going to be the same questions that you have. So it's a really good educational experience. And again, please tell your fellow traders about my YouTube channel. Give it a thumbs up if you like the content, and we will see you Wednesday for that live event. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.